welcome to the Real P&L Trading Show here, and this is where I share my accounts live, my real P&L, and I share it on 3 accounts. And I'm getting some feedback here, so I'm going to turn that down. And so here, also what I do here is show my 3 accounts live, and I also share my proprietary Safe Wheel options trade system for free. Answer any questions about it, show it, trade it live right in front of you, and that's what I'm here to do today. Also, one thing I want to check, always want to check my audio, make sure that you guys hear me okay. Um, and Kevin, good morning. Less is more says sound is good. Oh yeah, he actually told me the sound was good before I asked. He knows what I'm going to ask. Okay, good. Also, I want to let you guys know to post any questions you might have before I get to the end of the broadcast, because I want to make sure that I answer any and all questions. Sometimes I know we're on maybe a 3 or 4 or 5 second delay, and I just want to make sure you guys get the questions out before I end the podcast. So do those earlier rather than later. Okay, first let's talk about the earnings edge. You can see my account here, and you can see all my P&L from all my trades. I'm up 2,500. You can see that. My net lick, I'll just press this here and it'll show 11,676. It's the same as it was last week. And the reason for that is because I didn't make a trade in the earnings edge. Let's look at the spreadsheet. Did not make a new trade on the earnings edge last week. There was nothing available. GME was kind of in there, but that one's a little different than most. And what I've found is that GME, there's other catalysts that are more powerful than earnings. So sometimes that is a factor. You can see here my record since I did my last update in 2022, 27, 19, and 8. You can see my win rate's almost 59%. My average win, 732. Average loss, 540. So my average win is higher, and my win rate's higher than my loss. And you can see here, what was the net lick? 11,676. I think that's the same as I have here. 11,676. And what's SPY 528.17? Let me put that in here. And we can see the S&P this year is up about 11%. The earnings edge is up around 22%. You can see what happened in 2023, where the S&P outperformed. And then you can see what happened in 2022, where the earnings edge vastly outperforms. The earnings edge is not relying on the market going up, the market going down. It has nothing to do with any of that. It's totally not correlated. You can see the total returns, 133% versus 11% since I started trading the earnings edge in January 2022. So all the way from January 2022, 2023, halfway to 2024, 2.5 years, and the S&P is up 11.2%. Okay. Let's talk about now. That was the earnings edge. Let's talk about the Premier Level 5. This is my Premier Level 5 account. I traded in IB right now. Trading it in Thinkorswim or NatWab, the commissions were just crazy. I mean, like $2.30 or something like that. Where if I trade in Interactive Brokers, it's only like 80 cents or something very reasonable. I don't remember the exact number, but it's just like 1/4 the cost. Trade it. Let me renew this. That way you can see that it's the actual P&L. Field effects to get the data. Let's see if we can get 30. Oh, it's flashing in here. All right. $34,050. That's what it is. So let's put that in the spreadsheet. $34,050. It hasn't changed much at all from last week. 34,050. So it's like $5. Okay, so you can see the PL5 through 2024 is not. It's down a little bit, 3%, but it's not. I don't get any high drawdowns with it. So when the market gets a little more volatile, the PL5 is going to recover very quickly, and you can see here that the this should be 528.17. Let me fix this. F22. I want to make sure I got that right. Yeah. So you can see here the comparison. This I didn't start till April 8th of 2022. I was still doing my final backtest early 2022. So I didn't start this in January 2022. Otherwise, I'd be outperforming a little bit probably. But you can see that I'm underperforming a little bit. But on a risk-adjusted basis, remember, the drawdowns are about 1/3. So you can multiply this times 3. So that would be 39%, on a risk-adjusted basis. So still outperforming the S&P. But you can see I'm underperforming this year. But we'll see what happens by the end of the year because we get a little bit of volatility, and PL5 is going to come alive. And of course, the S&P is going to draw down with a little bit of volatility. What happened? We went about 8 months with only a 2% pullback, and that's not really good for the PL5. And then we had that pullback in April, which helped it a little bit there. But that is the PL5. I do have a larger account that I trade in now. I'm going to start talking about that a little bit more. I do a combination trade of the PL5 and a new trade that I call the duck. And so I have a little more diversification going on with that. Okay, so that is the PL5. So now let's get into the safe wheel. The correct account here. One. Okay. Here I'm trading LI. You can see my net lick. Let's talk about that. 65.28. 65.28. Let's put that 65.28. So a little bit from last week. And the safe wheel is underperforming a little bit here. Again, about half the drawdown, so you can multiply that times 2, but still underperforming this year. Vastly outperformed in 2022, underperformed in 2023. But when you take all the numbers from 2022 forward, you can see that the safe wheel is outperformed up 30% since January 2022, with the S&P up 11.2. And again, we've got about half the drawdowns of the S&P, so you can multiply that times 2. So this is really good outperformance so far. Okay, so that's the spreadsheet of what the update. Let's talk about what to do next. And I talked about my net lick, right? 64.80. In there? Let me put that in there. 64.80. Okay, so I'm down a little bit this last week, but not. All right. Looking at LI, this is the stock that I'm trading. Let's see the account statement here. Trades out there. Year to date, LI down. You can see that it's still up for the year, but LI is not doing what I want it to do so far. I'll stay with LI for as long as I can, as long as it's $20 and $40. I remember LI a few weeks ago, maybe a month and a half ago, it was at $46. So, if you want to run the wheel strategy and you get in and your stock's at $46 and it goes down to 20, you're probably hurting pretty bad. You're not just down, $400 trading the wheel. But because I'm trading the safe wheel, not that big of a deal. Okay, what do I do next here? Looking at this, the first thing I'm going to do is look at my hedges. I have a couple hedges. One, I have this hedge here that I buy every Friday. It's like I paid $6 for it. and it's a long hedge, and I bought the 23.50 call just in case the market, maybe LI gets a takeover bid or something and goes to $50. If that happens, I own this $24 put, and it would go to maybe 0. So I have that protected with this hedge, and it's gonna cost me $5, $6. That one's looking fine. It expires in 4 days. Now I look at my next hedge, kind of my major hedge, my put hedge, and I'm long 3. Question I ask myself, is this 100 days or less? No, it's not. So it's strong. It's not, doesn't have a lot of theta, and that's the way I like my hedges. Uh, Now also the other question I ask myself is this $24 strike within range, close enough of the actual price? The actual price here is $3.50. It's actually in the money. So I wanna know if it's within 70% of this price, but it's actually 100% from this price because it's in the money. So that the put hedge is good to go. Nothing to do, no changes need to be made here. Okay, now I'm gonna look at my next situation. Where am I with the actual wheel, kind of the traditional wheel portion of this? I'm long to here. And I have written down here what my cost basis or my assignment prices were. I get assigned at $28.50 for 100 shares, and I got assigned at $21 for another 100 shares. If I can't sell any premium, I will. If I own shares and I can't sell any premium, or if I'm in a position where I can't sell premium, I'm going to do things that will exit the position and typically start over. Let's see if I can get any premium. Okay, so I'm going to look at the closest can I get premium. The question is, in this expiration cycle here that expires on Friday, can I get premium? Well, I have the 28.50 that I can't sell any premium against that one because I'm not going to sell anything less than 28.50 at my basis. Okay, so those 100 shares aren't collecting any premium for me, but I do have a second tier at $21, and I can get some premium here. I can get at least what 20, $21. Yeah, I can get more than that. So what I like to do is look at how far out of the money can I get by selling my covered call. I can probably sell at the 21.50, and then I usually go back one. I'm gonna sell at the $21. I'm gonna sell here, take this, what is it? Whatever this could be, $34, $35 here. So I'm gonna sell one of these. I'll talk about mid price is 34, and I'm gonna talk about the sizing here in just a second after I put this in. Okay, so I'm gonna do a covered call here in the near expiration cycle. Okay, and the order filled right away. So I got 34 cents. So you can see now I've got 2 sets of 100 shares. One of my sets is 100 shares. I was able to sell premium and collect about $34. Now, the sizing, if I have my account between $5 and $10,000, which I do, then I will do the traditional wheel with one contract, and I'll buy 3 put hedges. If I had between, say, 10,000 and 15,000, I would double that up. I'd be trading 2 of these, 6 of these. If I had $15,000 to $20,000, I'd be trading 3 of these and 9 of the put hedges. That's how I would size. The system's already sized, right? You can't really have a trade system. It's not complete unless it's sized properly. You can't just willy-nilly make a trade. Today I'm going to use, $1,000 of capital, and then next time I'm going to do $2,000 worth of capital. You can't. That's not a viable trade plan. The sizing has to be part of the trade plan. So that is the sizing. All right. Let's get to any questions or comments that were made. See if you guys have any questions about anything. I appreciate you letting me know that my sound is good. morning. Good morning, Kevin. Um, some guy says the GME opened at $40. Yeah, I was looking at it on was it last Monday. It was $20. Yeah. So that's interesting. That thing is moving. Uh-oh, my sound is breaking up. Can you guys still hear me okay? Hope you can hear me okay. I have a different microphone I can put on here real quick. This is what if LI is below 20 next week, will you be picking up a new stock for the safe wheel? Well, no, I will still trade the LI and continue to trade it until I am out of the position. And typically, uh, when I'm out of the position, that's really defined by when I put on a new put hedge or if I own shares, right? So as long as I'm owning these 200 shares and I'm not called away from those shares, I'm going to stay in LI, right? Unless, one other thing that I wanted to talk about, I need to take a look at my put hedge and I need to compare it to my 200 shares. And when my put hedge make more money than how much I've lost on the 200 shares, it's time to exit. See, this is close. It's only about, $2 difference. It's not a significant difference. I'm not going to exit. But if this was like at $900 and this is like at $850, right now it's almost the same. I would exit the whole position and start over. And I probably should have done that last week. I didn't double check the flow chart. But whenever this put hedge, how does this put hedge pay off? Well, it pays off when you make more than what you've lost on your long 200 shares, not 100 shares, 200 shares. So you have to have 200 shares for this rule to apply. But right now, see, this is higher right now than this one, 862 versus 861. But if this was, significantly higher, 20, 30, 40, 50 bucks higher, I should exit the whole position and start over. Now, when I exit and start over, that's when I could determine whether I would get a new stock, whether it's that of LI. No, I would stay in because it's still above $20. It was at $19.98. Started over, I would not use. Yeah, that rule. I forgot to apply that rule last week. I think last week, if I would have applied the rule, I would have been out and started. But it's not a big deal. I'm not hurting or anything. I hope LI goes down more. I hope it goes up more. I mean, I hope it stays where it's at. I'll keep this premium. It doesn't matter what it does from here. I'm still gonna be just fine. GME call premium is insane. I don't doubt that. Let's see what it is. GME calls. Okay, right now GME's well, it was at $40. Now it's at 31. So it costs six, five, almost $6 for at the money at a $32 strike. That's like 15% just for that, for the call. Oh, the puts aren't cheap either. Yeah, look at the implied volatility, 430%. See, this is the reason why I kind of stayed away from this because you get a little bit of with the earnings edge, you get a little bit of a vol collapse. Say this goes from 430 down to 200. 200 is crazy. You could easily do that in one day and then you would lose. You'd have a significant loss. This high premium stuff, high volatility, it's a little, with the earnings edge, it's a little shaky. This is more, is the desired price range of $20, $40 related to the account sizing? Absolutely. That is exactly what it is related. Wondering if this is the same on higher price stocks. Yeah, should be. I haven't back tested it, but you could use a higher price stock and use similar ratios to size. So if we had a stock between $40 and $60, might be able to run 2 tranches and 6 foot hedges, stuff like that. Should all correlate together, but I don't, because of the fact that I haven't back tested that exactly. I don't really promote it that way. I just use $20 and $40 and one contract and 3 foot hedges between $5,000 and $10,000. Gamer, Carl, you are super. Okay, thank you. Avery, does volatility of a stock matter? Well, typically, no, but when you get something absolutely crazy like 430%, then I would say there's some outliers out there that I just stay away from. GME being one of them, or the earnings edge. I'm referring to the earnings edge. Obviously, yeah, I'm going to stay away from this from the safe wheel too. Um, safe wheel's kind of been designed, I think, for quote regular stocks. I mean, I don't think GME is a regular stock. You could run some back tests on it, see if it works for the safe wheel. It might. I know that I stayed away from high volatility stocks. There was a reason. I'm trying to remember now. I can't remember every single reason for doing everything that I do right off the top of my head. I have okay, so that is what's going on with the safe wheel today. Today's June 3rd, 2024. So we're in the middle of the year already. And any other questions, let me know before I kind of tail into this. I don't see any other questions. I appreciate you guys. And one thing I always like to say in parting, if the P&L is not real, what else are they trying to conceal? All right. I'll see you next week.